I will invite all my panelists to join me for the forum discussion. So as a start, let me just introduce to you or highlight to you what are the common issues. The objective of this session is to look at or to discuss the current issues and challenges that faced by various industry, and if possible, how do we overcome these issues. In addressing on this issue, custom, since the GST implementation, as mentioned by Puan Asma earlier on, the speaker earlier on, custom have actually tried to actually resolve or give solution to some of this issue in terms of issuing DGS decision. Yeah, there are many decisions being issued by custom, and this DGS decision is actually giving you solution as to when you face a problem in GST implementation. Apart from DGS decision, custom have also issued GST guides. Yeah, so all this can be downloaded from the custom website. But of course, in terms of DG's decision, as mentioned by Puan Asma just now, that custom have stopped issuing DG's decision since December. So hopefully, custom will continue to issue public ruling, and that will be very helpful for taxpayer in resolving some of the issues that they face in GST implementation. Yeah, so public ruling is something that we have in income tax. So hopefully custom will also follow what Inland Revenue have been doing, issuing public ruling. Now, let me just highlight to you some of the issues that I've encountered before over the last 2 years. The first one, yeah, in claiming input tax, everyone should hold a valid tax invoice. So one of the issues that faced by taxpayer is, what if I don't have a tax invoice? I make payment of an expense based on a bill of demand. So if you make a payment based on a bill of demand, technically you cannot claim the input tax credit from that payment. Why? Because you don't hold a valid tax invoice. So this is one of the issues faced by a lot of taxpayers. Number two, there's still a lot of confusion as to what constitute reimbursement, what constitute disbursement. Yeah, so reimbursement, yes, is a supply subject to GST. Disbursement is not a supply, not subject to GST. But as I mentioned, a lot of taxpayers still is confused as to how I distinguish it. I would not go into detail this particular area because tomorrow, I noticed tomorrow, you would have a full session on what is reimbursement and disbursement. That is your session 9, if not mistaken. Yeah, so I will not go into detail. Number 3, supply of commercial property by an individual, even though the property is inherited by the individual, is subject to GST if you exceed the threshold set by the custom. Yeah, and this threshold or this guidance as to whether an individual who supply commercial property is subject to GST or not is in one of the DG's decision that I mentioned. Yeah, and the DG's decision says if an individual supply commercial property more than 2 units, or more than 1 acre land, or more than 2 million in market value, that would be subject to GST. You know, even though this property is not purchased by you, it's inherited. Yeah, this is inside the DG's decision. And the fourth point that I have over here is in terms of bad debt relief. Now, in the DG's decision, custom have also set the rules that you can only claim bad debt relief if your debtor don't pay you for more than 6 months, only if your supply is to a GST registrant. If your supply is to a non-GST registrant, you can't claim bad debt relief. Yeah, this is something that the custom have decided in one of their decisions. Next point. Application. I'm sure this is a practical issue that faced by a lot of you, whenever you have GST overpaid, GST refund. Yeah? In order for your refund, the GST overpaid, to be able to offset against your GST payable or liability during the period, you must get approval from custom. And the issue here is the approval from custom may not come by the deadline to submit your GST return for the period. So if the approval is delayed, it may result in penalty, yeah, because your payment is due, but you cannot offset the GST overpaid. So penalty will be imposed in this particular situation. Next, long turnaround time in getting reply from custom. This is a common issue that you cannot, you will get a reply from custom, but it takes a long time. So whenever you have issue in your GST treatment, yes, you can write in, but the reply may only come after a few months. Yeah. So that is a very, very practical situation faced by a lot of taxpayers. Now, next, imported services. A lot of taxpayers thought, if I'm not a registered person, because I'm below the registration threshold, I do not have any GST responsibility or GST obligation. No, not really. Even though you are a non-registered person, but you have imported services, you need to account for GST, yeah, using a form called Form GST-04. Yeah, this is something that a lot of taxpayers may not be aware of. Even though you are not a registered person, you still need to account for output tax whenever you got imported services consumed in Malaysia. The next item here is exported goods. Yeah, one of the practical issues faced by a lot of taxpayers is, in order for your export to be zero rated, you must be able to prove that your goods are really exported out of the country. And what is the document that is required by custom to substantiate that you indeed exported your goods? K2 form. Yeah, and a lot of times the taxpayer may not have the K2 form with them. It may be with their freight forwarder, maybe with their courier companies. Yeah, so you must get your K2 form for you to substantiate that the goods are exported. And the last item I have here is, a lot of times, yeah, taxpayer is not aware that even though you have received a deposit for advance payment for your goods and for the services, you still need to account for GST. Why? Amount received. Yeah? Unless the deposit you receive is just a security deposit. If it is not a security deposit, it's a prepayment, it's advance payment. Even though you have not issued a tax invoice, GST, the output tax, must be accounted for. Yeah, must be accounted for. So these are some of the issues that I've encountered for the last 2 years since GST implementation. Now, let me just now introduce my fellow panelists, yeah, into the stage. Let me just introduce each of them. My first panelist is Ms. Christine Tan. Christine is the Vice President of eStream Software Sdn Bhd, which is the developer of SQL, yeah, software, account software. So she's a very experienced person in terms of GST implementation. Christine used to be attached with HSBC as well, yeah, and she is also an active member of the Malaysian Retail Chain Association. Yeah, I'm sure afterwards you can pose questions to her in relation to retail industry and as well as software system. My second panelist is Mr. Hong. Mr. Hong Get You. Can we welcome him? Mr. Hong is the General Manager of Fast Track Sdn Bhd, which is the software developer for SAP. SAP. Mr. Hong is very experienced in terms of consultancy, project management, project implementation on business solutions. Business solution. Mr. Hong actually started his career as an engineer with Motorola. Yeah. But he actually moved on into management, into accounting, into finance. Yeah. So he has very vast experience. My third panelist is Mr. Sathya Kumar. Can we welcome Mr. Sathya? Mr. Sathya is actually from India. He's the CEO of and founder of Tycoon Advisors. Prior to that, he was attached with KPMG India, handling audit, tax advisory, and recently GST cases and transfer pricing as well. Yeah? I was speaking to Sathya just now. Apparently, Sathya wears two hats. He has his own firm. At the same time, he's also attached with the government of India. He's actually the advisor for the finance minister in India on GST implementation. So if you need to know anything about India GST, you can always ask him. Yeah? He's very, very well versed with GST in India. And for information, GST has been implemented in India for 2.5 months, since 1st July this year. And the rate can be as high as 28%. Now, my fourth panelist for today, Ms. Yap Lai Han. Can we welcome Ms. Yap? Lai Han is the Executive Director of PricewaterhouseCoopers Tax Services. In fact, Lai Han used to be my colleague in Pricewaterhouse. Yeah? She is very experienced. She has over 20 years of experience on indirect tax, and she has handled many, many multinational clients in terms of indirect tax issues. And post-GST, she has been actively involved in GST advisory work, including cross-border transaction, structuring of deals, health check and assessment, training, due diligence, and custom appeal and resolution. So she's very, very hands-on, has practical experience on indirect tax issue. So with that, I will actually start the forum discussion. To start the ball rolling, I will actually maybe pose a question to Mr. Hong. Mr. Hong, in your experience in the IT sector, can you share with us what are the common issues or current issues that you come across in implementing solution for your clients, and what are the things that the custom can do or taxpayer can do to resolve some of these issues?
Yeah.
Over to you, Mr.
Hello.
Hong.
Yes. Hello. Thank you. Okay. Perhaps before I answer the question, I just want to sum it up or share with us a little bit of background. For us, we are from IT background itself. So we will look into it from the business aspect and the technology aspect, and how to customize the GST add-on for the custom requirements on. So if you talk about the problem we face there's a very simple problem, like which tax code to use for what transaction. Even after 2.5 years, we still have this type of question thrown about by our client. Okay, if you look at it, my customer, I think you know SAP have certain size of customer. Our customer normally they have turnover easily 20 to 30 million and above. Okay, so normally they have a qualified accountant. So these people also, they are qualified. They also go through a GST courses and so on. They also throw back all the simple question from what tax code to apply. Moreover, we also have some customer in mixed supplies area. I know that the more complex issue in GST Malaysia is mixed supplies. So a lot of computation, how to calculate IRR. The worst situation is capital goods adjustment is applied to them. We have implemented easily probably about 20 customers in that kind of range, and one of them is one of the industry is hospital. Okay, so they say initially my IRR computation is probably I can claim maximum 20%. I don't mind to absorb because hospital normally have slightly better margin, but on the other hand, or the income tax itself, they want them to segregate. Otherwise, you are not able to. I mean, in terms of taxation, at the time you are being penalized. So whatever GST you account for, you have to segregate it out. So they face that issue as well. And the hospital is also badly affected because of the CGA. Because most of the equipment they purchase is more than 100,000, which they are subject to CGA already. So the computation of CGA is quite complex to them. So in fact, if you really want to go into detail, there are quite a number of issues, from small issue like I mentioned to you, the selection of tax code, until the complex issue like CGA and so on. All area we seen it. Okay, so that's what our experience have for the past 2.5 years lah.
So mainly the issue is on mixed supply.
No, it can be as simple as selection of tax code. Okay.
Okay, what about Christine? Christine, I think your clients will be slightly different from Hong. Yeah, yours will be more on SME.
Yeah, exactly.
Can you share your experience, please?
Okay. I do agree with Hong that as of today, after the 2.5-year implementation in Malaysia, there's still many of taxpayer, they are facing problem day by day where there's still focusing on very simple questions that we can receive every day, like what you say. And the main problem is the educations and the support. Some taxpayers are not really, I mean, they are still lack of some knowledge, some educate. So we as a software provider, we as a support in software, we have a responsibility or we have a task to educate customer and to let them actually know that actually some ruling from custom is quite direct, sometimes it's quite direct. Just that we need to educate them in where and how they need to actually impose in their software. And of course the software need to be custom approved. That's a very important part. Yeah. So yeah, I can say that the GST registrant, a taxpayer, actually they are playing the role like a middleman to helping to collect the GST from customer. So the common issue we need to solve by both party ends, as we are new in both party like custom and as well as the taxpayer. So we are new and go through by Mr. Chow common issue that I encountered, that some of the part like some turnaround time, this and that. And I believe that both parties, we have our own task and responsibility to go through very carefully in terms of checking and submitting and even responding to the taxpayer. Thank you.
Thanks, Christine. From what I hear from both of you, in terms of coding, does the custom GST guide on accounting software help? And is it something that can be improved?
Hello? Okay. Just now we saw a list of about 3 pages of issue and so on. Computer is quite straightforward. 1 + 1 is equal to 2. If you tell me you got option 1, option 2, option 3, we can just code it for you. But if the definition or the ruling or the guide are not clear, it's quite challenge for us to educate computer to react according to what we want. So that is always the challenge we face it. Based on the question I highlighted earlier, if you select the long text code from very beginning, then your computation, your submission of GST will be, all 3 will be out. That's basic, okay? So But if coming back to the guide and so on, I think we've seen from the very first GST Act and issued out by Custom, we went through the certification with Custom and so on. And first round and so on, we see a lot of gray area. I think both sides, software vendor together with Custom, are learning from each other as well at the time. Okay, so then we can see along the way there are a lot of new guides coming out, which actually ease out our work. Okay.
And they have updated the
They
guides
updated
as
and so on. Because if you talk about compute, or you talk about implementation of any system, whether it's a simple ERP system or the GST system by Malaysian government, so it's always had to start with education, implementation, monitoring, then enforcement come into it, then the alignment again. So all these things will repeat and repeat. So actually credit must be given to a customer also. Because to implement GST for 32 million population is quite huge. It's not a small exercise. Okay, look at it. Look at the way we implement, for example, the ERP system. Probably will take about 4 to 6 months for any ERP system to be in place. Then we also will take 1 or 2 months to stabilize it. Same thing like here. After 2.5 years, you need time to stabilize it. Look at some context, for example, like Australia and so on. They take not less than 3 years to stabilize the whole thing. Okay. So I think now is okay. Custom will continue to issue some public ruling and so on. That will ease out the guide to us. Okay. So I think the other angle is the education itself. We have to continue provide education to the public. Okay. Because don't forget, a lot of businessmen always like to challenge the limit. Okay. It's very clear transaction. You say this must be SR, must be SR, but they say, I don't want to use SR. Can you think about some other code for me or not? Okay, so I really do not have an answer for them.
This will be the common issue, right? Yeah, this will be the common issue. Yeah.
Thank you. So we have heard from the IT sector, IT side. Let's hear from the practical side, from practice. Lai Han, would you like to share your experience?
Okay. Well, from the practice side, I think because we are involved in a lot of, most of our clients are actually from the MNCs and the larger group of companies. So from a GST perspective, you're looking at 2 years down the road. Of course, initially when the GST was announced, the government announced that GST is going to be implemented 1st April 2015. I think everybody is trembling to basically trying to make sure that there is the law, there's a regulation. So people are actually trying to make sure that at that time, to make sure that their systems are in compliant, they have process in place, and they have documentation in place. Yeah, I think that at that time, that's the focus for GST implementation. Now 2 years down the road, I think we see a lot of changes. Yeah, custom has been improving. Right? I'm sure all of you will have been aware that Custom has continuously engaged with the business community, with the companies. Of course, first is to try to basically get an understanding of how businesses work, what's the issue faced by businesses. I think along the way they have learned, and also along the way, if you see the progresses, you see that a lot of DG decisions have come out, a lot of the guides have changed. So in that sense, that is actually a reflection of the understanding that Customs has, as well as also Customs in coming out with a solution or decision that would facilitate the businesses in complying with GST. So I think now what we see is that, again, 2 years down the road, I also see that because we deal a lot with tax agents, we deal a lot with tax people, we deal a lot with finance people. So from that end, we also noted that all these people actually have a better understanding of GST. They are now a little bit more clued in terms of how GST works and how GST implicates or applies to their business. So the issue now that came up that I observe is more towards the technical perspective. Now we are going into integrity, Now we're looking into transactions. So we have looked we will look at a chain of transaction, businesses start to realize that, GST is not so easy. No, even though you say output tax, input tax I just charge, input tax I just claim, but when I look at a chain of transactions and trying to apply that GST into that chain, then people start to realize that it's not so easy. Yeah? So a lot of issue comes out, a lot of technical issues, like what Mr. Chow has raised, yeah? In terms of reimbursement, disbursement. How do I apply that concept? Even though Custom has came up with their decision, is how to apply that concept in my day-to-day transaction. Also, we have seen that now it goes into even that is about technical in that sense. We also see a lot of cases where a client needs clarity, further clarity. Yeah? Even though I have a decision on reimbursement, disbursement, but I still need further clarity. And I also note that there is a lot of letters being written to Customs to confirm on technicality, yeah, on a lot of issues. So is that what I see currently?
I think what I can hear from Lai Han is I think there's greater awareness in terms of taxpayers as to whether they are treating their transaction correctly or not, and some of them in fact has actually, from my experience, some of them actually engaged a tax consultant to do a health check to see whether they have been doing it correctly, treating the input and output tax correctly or not. Thanks, Lai Han. The next person I'm going to speak to here is Mr. Sathya, as mentioned. Mr. Sathya is actually from India. And Mr. Sathya, can you share your experience in terms of India, GST in India?
Yeah, thank you, Chan. Yeah, it is a great pleasure to be here in MIA, addressing the most dynamic accountants and the policymakers. And in fact, the inspiration for GST is from Malaysia for India. And Dr. Subro is here, who is a champion of GST in Malaysia. So we are thankful for him. I follow his articles, his way of implementation in Malaysia. The idea of GST in India dates back to 1998, when the Prime Minister was Mr. Atal Bihari Vajpayee. And it took almost 20 years in India to give birth to a child called GST. And it was when 1st July we got the baby, and it's just 2.5 months. And this baby is also, we are trying to nutrition the baby. It is malnutritioned for a while because people are not that accepting the GST. But the credit goes to the present Prime Minister, our Honorable Prime Minister, Sri Narendra Modi, who got this in India. Before we actually understand the GST, you all be excited to know why it took 20 years in India, in spite of the fact that the government wanted to bring in. The government wanted to bring in. You need to understand India is a federal country. I understand that India is the first federal country in the world to implement GST. And in India, GST is not as simple as Malaysia. It is, in the sense, the structure is a federal structure. We have central government, we had state government. And under GST, we segregate the revenue to central government, CGST, state government, SGST. And we also have something we have innovated. India is also good in innovation tax. Yeah, it's a good idea, which Mr. Trump is also looking at adopting in US. That's called IGST, Integrated Goods and Service Tax. Where, for example, India is a country, complex country, but a beautiful country. There are about 29 states in India, 9 union territories. Each state fights. It's called competitive federalism. Now under the Modi government, Honorable Prime Minister Sri Narendra Modi, now cooperative federalism is given birth. The first baby of the cooperative federalism in India is GST, where all the state finance ministers and my union finance minister will sit together in a council called GST Council. And this GST Council will decide the way forward in India. This is the first federal institution in India where the state ministers, state government finance minister and union finance minister have come to a forum and they don't fight. because it's a revenue matter. Every state wants a revenue. Now, if you look at the rate in GST in India, in Malaysia, I was very surprised why people are not able to accept 6%. In India, we have basically four rates, 5%, 12%, 18%, and 28%. These are the only simple four rates. And don't forget, gold is an important thing for India, where women are very possessive about gold. Out of total gold consumption in the world, 37% come from India. And we determine the international gold market. If gold price is very high in Malaysia, it's Indians' reasons. India is a reason. This gold, you can't rate it, you can't tax it at 28%. If the government taxes it at 28%, the government will lose the election. Women are powerful in India. So is the case of Malaysia. The rate that is fixed for gold is 3%. And for the diamond, it is 0.25%. So, as a practitioner, I have to remember all these rates. Not only that, and the goods are segregated to different rates, and services are primarily coming at 18%. One important thing in India is the consumer price index. If you look at the consumer price index, 50% of the products are either zero rate exempt category or nil category. The reason is, India is a developing nation. We have to generate revenue. We cannot have a regressive method of taxation. We need to have progressive method of taxation. So if you look at the consumer price index, 50% of the products are nil rated or exempted category. Balance 50% is only taxed at these four rates. In that also, majority of the products what the population consumes for the livelihood or for the living, that is taxed at either 5%, and middle class is 12% and 18%, and the rich people are taxed at 28%. When I say rich people, the luxuries and sinful products are taxed at 28%, along with something called cess. Cess is an extra, which is also levied. And two important things which I wanted to highlight is, don't think all the products have gone inside the GST. And don't think all the indirect taxes have gone inside the GST. Under the Ministry of Finance, customs is there and GST is there still. Customs is away from GST. The reason is, if you bring customs into the GST, what will happen is, India feels the domestic manufacturing will be affected because the rates will become uniform for the import as well as for the domestic manufacturing. So they have kept the customs duty away strategically from GST. And you might ask, you can put the 28% like that. You might ask that you can bring the customs under the GST and put 28% so that your domestic manufacturing is not affected. If you do that, you will violate the World Trade Organization norms. So they have kept the customs duty away from GST. And petrol, an important component, important product, alcohol for human consumption. Alcohol for human consumption is kept away from GST, and power sector is kept away from GST. The simple reason is, petrol constitutes almost 50% of the government's revenue in India. So the reason why they kept the petrol away from GST for a while is because it will affect the revenue, entire revenue. They don't want to put the 100% revenue into risk. So they kept the petrol away from GST. For information, all the transporters are going for strike, saying that please bring petrol under the GST because we are losing input tax credit. Look at, if petrol was brought under GST, they would have said no GST. Now they know the value of the input tax credit. Now in the first time in the world, the business people are going for a strike asking the product to be brought under the GST. This is the story of India, which is very exciting. Thank you.
Thanks, Mr. Sathya. Thanks for sharing your India experience. So, from what we hear from Mr. Sathya Kumar, our Malaysian GST is not that complex after all. We only have one rate. Yeah, we only have one rate, and apart from that, it's zero rated and exempt supply. We don't have 18%, we don't have 28%, we don't have different rates for diamond, different rates for gold. Yeah, so it's not that complicated after all. So thank you very much for sharing, all of you. Our next session now is to look at any question that is posed by all of you from in the pigeonhole. Any question? Okay, let me look at the first question. The first question, is original K2 necessary? Freight forwarders like FedEx only provide scanned copy. So this question, I think, Lai Han, you want to address it?
Okay, I think for customs documentation form, again, depending on port of imports, I think, yes, original K2 or K1 is required to be kept. Again, I do understand that certain ports you have what we call online. So then the question is whether online printouts of K2, K1, as well as a receipt, it would be sufficient, or you must have the physical K1, K2 form. Yeah. So there's always this the debate, and what I feel is that if even if it's a printout, yeah, because you are going on a paperless practice, so printout of K1, K2 and receipt form, I would think that it will still be acceptable, because whatever it is, customs can still go online to check. Yeah, it's all captured in the system per se.
Thanks, Lai Han. Let me look at the next question. The next question is to Mr. Hong. Mr. Hong, I have heard from my friend that SAP system not able to provide GAF file for GST audit. Is there any update that has been done for the user to extract GAF file as at today?
Hello? Okay. Let me clarify a bit. SAP is a bit marketing talk, but SAP have two solutions. One is SAP Enterprise. I'm sure you are referring to SAP Enterprise. GAF file need to be customized for custom purposes. So you have to refer back to your custom for that. Whereas our focus, we have implemented more than 300 sites, but all are SAP Business One for the mid-sized organization and above. So if you really want to talk, we can talk offline later, but you can go to a booth and see me. But your case is you need to customize on that, because those organizations who use SAP Enterprise solution, they are large, they got all sort of business transactions and so on. So that had to be customized separately.
So it's possible, but must be customized. Yeah. Thanks, Mr. Hong. I saw another question, which maybe Christine or Mr. Hong would want to answer. This question is, which system is better, SQL or SAP?
Okay. In fact, I believe there is no the best software, but is the most suitable software for your industrial. And if you compare like SAP and SQL, I don't think there is a needed to do the comparison, because we are totally different segment market and different needed by customer industrial. And as we mentioned earlier, the education part is education, and the support part is the most important thing. No matter what software or not, what system that you are using. And we are glad to let you all know that those, if you want to know more, you can actually visit our booth in Hall 4, and we also have our education advisor be there to attend to you later.
Yeah, maybe I can add in a bit more. Because organization, you got small until large. Small organization, normally you require flexibility. Whereas large organization like Petronas, control is a must. You cannot allow flexibility. The moment flexibility happened to Petronas, for example, I think all our money also gone. Okay, so then you look at it. Okay, flexibility. Those normally we turn it as tier 3 solution, like SQL accounting and so on. So they are quite flexible, and that will be good for you if your organization at that layer. But once you move very large, like Fortune 500 or even some large organization, Tenaga Telecom, or all the oil and gas company, they need to have control because they run multiple countries. They can't allow even simple human decision making. They need to be system driven. So that is where enterprise is required. Whereas then in between tier 2 solution like SAP Business One is where we allow control, plus we also have flexibility on the angle. So that depends on your need. There's no so-called a best solution. And don't forget, when you talk about a solution is an equation of product plus implementation or consultancy. Product probably is about 30% of it. The remaining is about 70% is a consultancy and implementation. Okay? And we are moving to a big data world and so on. Probably the big data, the data structure in future is even more greater.
Okay. So my conclusion is both are good, but depends on your requirement. Support. And customization.
Correct, exactly.
Yep. Let's look at the next question. Okay, let me just take this question. If a parent of sole proprietor, GST registered person, has passed away, ceased business, leaving a property to the heir, what's the GST implication? Will the heir require to pay GST on the inherited property? Can you answer this question?
Okay. Basically what you need to consider is this. For GST purposes, for GST to apply, there must be a supply. Yes? Okay. Now, for what is the definition of supply under the GST Act? It says anything done for consideration, right? So that is the basic for GST. There must be a supply. For a supply to happen, you must be doing something in which you receive consideration. So in this instance, when we're talking about inheritance of property, did you do anything? Did you receive any consideration? If there's none, because it's just inheritance of property. Somebody died, somebody passed that property to you. In this case, then there's no GST to be accounted because there's no supply to it. So the next thing probably you need to think about is once you inherited that property, then you need to think about what property are you inheriting? Is it a residential property? Is it a commercial property? If it's a commercial property, then you need to think about, if you are an individual, then you need to think about, am I liable to be registered for GST purpose? Am I caught within the GST Act? So that is probably the GST implication that you need to think about, not so much from the inheritance, but rather what happens thereafter.
When you subsequently sell or when you rent it out, there will be GST implication. As I mentioned to you, an individual may be caught by the DG's decision if he or she owns more than 2 commercial property, more than 1 acre of land, or more than 2 million in terms of market value of commercial property under one of the customs DG's decision. Thanks, Lai-Han, for the answer. Let's look at the next question. Another question on SAP. How does SAP cater for reverse charge mechanism?
Hello, okay. Actually, it's part of the features we have it. We already customize for all our customers for that purpose. So probably you can go to the booth there. I'll get my people to show to you how we handle that, because it's quite difficult for me to share with you here. Okay, but we can share with you the system, how we handle the reverse charge mechanism there.
Thanks. Let's look at the next question. Question from Mr. Sathya. Mr. Sathya, How was the industry feedback on GST implementation in India? Suppose your new baby, the new baby.
So everybody is excited when you get a new baby, and industry was also excited about GST. And in fact, I'm going around the country the past 6 months to interact with the industry people, Confederation of Indian Industry, FICCI, and a lot of industry forums. What I find is the large-scale industries are excited about GST, the MNC companies and Indian large companies, but SME and MSME, which is an important aspect of our country, where about 90% of the employment is provided by the MSME and SME, are not welcoming GST. The reason is, again, India, if you take 100% economy, 90% of economy are informal economy, where they are not liking to pay tax. I'm using the word called liking. Then they have to be taxed. Government has a pressure because Indian government fiscal deficit is about 3.5%, and they have to increase the revenue in the government. But on the other side, there's an informal economy. Thanks to demonetization, post-demonetization, a lot of associates have come into the tax net. The GST is going to be a game changer for Indian revenue authorities. The reason is, today, under the GST, we have only 8.6 million assessees. India is a population of 1.3 billion, and we have tax assessees only 8.6 million. Now, Honorable Prime Minister Narendra Modi ji is looking at bringing robos for tax audits. Robos for tax audits, not accountants. So he's looking at bringing for robos tax audits, and compliance is also increasing. And just after introduction of GST, within 2 months, 1 million new assessees got added under the GST. And the vision of the government is 50 million by 2021 is one of the statistics which it says. If it comes, India will become a developed nation only because of GST. At the end of the day, why do we need tax revenue? We need tax revenue in India because to uplift the people from poverty. India has 22% of the population below the poverty. So tax is a game changer for socio-economic development in India. And GST in India is not just tax reform. It is a technology reform. In fact, when I was discussing with the software vendors, they were excited about our technology reform in India. In India, there are 3 returns, basically. GSTR1, GSTR2, GSTR3. GSTR1 is a record of outward supply. GSTR2 is a record of inward supply. GSTR3 is the net tax liability you pay, outward supply tax what you paid, minus inward supply input tax credit, balance portion you have to pay. Don't forget, in GSTR1 in India, you have to file invoice-wise detail. Invoice-wise detail. Let's assume I run a large company where about 20,000 invoices are raised per day or per month, as the case may be. 20,000 invoices details has to be uploaded in GSTR1. Can you imagine in India, under the GSTN in network, we are going to have 36 billion invoices. 36 billion invoices. Think whether industry will welcome or not. Industry is actually facing the pain now because everything has to be accounted. But for that, large industries have accepted because economies of scale, input tax credit, so cost optimization and more production. But MSME, SME, they feel they'll be killed under GST because economies of scale are not good for MSME and SME. I have given proposal to my finance minister, Honorable Union Minister. I have given proposal from my understanding of India. I said that the government should consider the MSME, SME, they should make all the sales made by supply made by the MSME and SME up to the turnover of 1.95 million ringgits. I'm trying to convert to Malaysian ringgits to be zero rated, and they should be provided refund of input tax credit so that they will get the working capital facility so that they can grow. Otherwise, they are not able to compete with the MNC because their economies of scale are not optimized. Beyond 1.95 million ringgits, you can tax them at the par with the MNC company. But for that, MSME, SME will face a challenge because they are not able to scale up their business. And this is the story of overall view of the industry. But different sectors are there. Hotel industry is not welcoming because cash business is getting affected. Transport business is not welcoming because cash business. And whichever formal economy, formal sector is welcoming, informal sector is unwelcoming GST because they have to account everything and pay not only GST but income tax also. Income tax also because it is mapped to the tax identity number. So both collection will increase and Indian government is very happy. Indian government is very happy and this is the story of the industry issues in India. Yeah.
So what I can conclude is it is actually, I would say, divided. Some welcome, some not really, not really. Thank you, Mr.
But
Sathya.
accountants have welcomed this because it's a huge opportunity.
Yeah. Let's look at the next question. For bad debt relief and recovery, are there any technical issues as far as software is concerned? Christine, you want to answer this in relation to software?
Okay, actually, I don't think there's a, for our software, the bad debts relief is automation. Yeah, so I believe most of the software can be able to code this as automation, as we know that it can be, but of course, those custom approved software, and we do, like just now what Hong mentioned, that all the ruling, all the updates, these are our works. We need to update and we need to continuing updates our software, and we do support and educate our customer. So I believe this issue when come to our software is we can do it automatically, and we can remind customer this and that how to claim back. Of course, it must be GST registrant because if it's open to non-GST registrant, I believe there is a gray area to so it is must for GST registrant for the bad debts relief and
Thanks, Christine. Let's look at the next question. Why does custom require a person to pay GST for selling a commercial property when it is a one-off sale and not for furtherance of business? I think this is actually a policy decision. This question should be posed back to custom. I don't think it's appropriate for us to answer that question. Yeah? It is a decision made by custom. Let's look at the next question. What is the GST treatment if we bring in the demo machine, GST paid by us for demo purposes to our customer? However, this is not our asset nor purchase. It's only a demo unit owned by overseas vendor. Laihan, you want to look at this question? If not mistaken, this is under GST relief.
Yeah, I think so. There is actually a relief for this, for temporary import, for demonstration purposes. But I think if looking at the questions, if let's say GST has already been paid, you haven't applied for relief, then the question is really whether I can claim back the GST because I'm not using the demo. The demo is being used by my customer. So I guess it goes back down to the basic question of what is the criteria for you to claim input tax credit? Yeah? So the law is very clear on that to say that if the GST incur is actually for the making of a taxable supply, then you can claim. And it must be for your business or furtherance of your business. If it qualifies, then you are allowed to claim the input tax credit. So in this instance, if I look at it, is your business is selling equipment, yeah? I'm assuming your business is selling equipment. You bring in this demo set, you need to supply it to customer for them to use. So if they like the demo set, then they will buy from you, I'm assuming, yeah? So if that's the case, then how I look at it is that, yeah, this demo set, when I bring it in, is actually for my business, because I want to generate sale out of this equipment. Yeah, irrespective that this demo is being given to your customer to use, that is another consideration you need to think about when you give the demo set to your customer to use. But at the point when I import it in, I import in for the purpose of my business. So, and for my business, and the business is actually for me to sell that demo set subsequently. So if that's the case, I would think that you will be able to claim an input tax credit. Yeah. But you also may have to then consider on the other flip side is when you give that demo set to your customer, would there be any GST implication? Yeah.
Thanks, Laihan. Okay, the next question. If we provide free transport for factory workers, can we claim input tax on the bus rental? This, I think, is this question, the answer is actually in the input tax credit guide issued by Custom. In that guide, it is stated very clearly, if you provide transport to factory workers, you are providing exempt supply, and therefore the input tax in relation to this transportation will not be claimable. Would not be claimable. It's inside the guide on input tax credit. Okay, this is a question on partnership. Partner A and B jointly bought a short lot for rental purposes, partnership. Both partner A and B own a partnership, GST registered. Can partner A and B claim input tax as the tax invoice can't be issued under the partnership? Laihan, you want to try this?
Okay.
You want me to help?
Yes.
Okay, let me help.
I need to
let me help
make
you.
a lot of assumptions.
I think go by technically. Technically, an input tax claim can only be claimed if you hold a tax invoice under your name. So if the tax invoice is not under the partnership's name, technically you would not be able to claim. Of course, practically is I cannot have the tax invoice issued under the partnership's name. I think in this case here, you may want to write into Custom for exception, for a concession. Otherwise, technically, you can't claim the input tax. Cash deposit. Cash deposit received from overseas for advance payment on repairing equipment that will be exported later. Time taking might be crossed over next year. For this type of advance, consider out of scope.
I presume I'm going to answer this question since it's a technical question. Okay, for deposits, you need to look at whether the deposits is actually a security deposit, so it's just a deposit, and whether that deposit actually is meant as payment. Yeah, so that need to be established. If let's say it's a security deposit which you're going to subsequently refund to your customer, then there is no GST implication. But if it's a deposit where it's actually meant for payment, yeah, advance payment, then what happens is that then you need to look at what's the services that you're providing. In this instance, it looks as if your services, you're providing a repairing services. Then you look at, okay, for services, repair services, basically by default, GST 6% is applicable. Yeah, I'm assuming you're in Malaysia. Yeah, so in that case, then the next question or the next thing you need to think about is, okay, since my customer is overseas, then can I zero rate this service? Yeah, so then you look at zero rating, yeah, the GST zero rating order. Do I have a provisions under the GST zero rated order to zero rate these services? If I look at it, if you're talking about repair service, the only item that comes to mind is item 12, I think. So if item 12, there are a bit of conditions that you need to fulfill before you can actually zero rate your repair services. One of it is actually the services that you provide must not directly relates to goods or land in Malaysia. Yeah? So in this case, if I read the questions, I would presume that the equipment is in Malaysia. You are doing the repair in Malaysia. So in that case, you would not be able to zero rate under item 12. Yeah? So then it becomes a standard rate supply for GST purposes. Okay?
So it's standard rated. It would not be zero rated because it would not be considered exported service. Thanks, Laihan. Another technical question. Under group registration, if a tax invoice was issued under member A, but the expenses was incurred by member B, can member A claim the GST? I presume claim the GST means input tax.
Okay, under group registration, basically what it means is you file a single GST return. Yeah. So under the group registration, the benefits of group registration basically is the supplies between companies or supplies between companies within the group will be disregarded for GST purposes. So, however, if you look at input tax claim, I think we go back to basic again. Yeah, who incurs those expenses? Yeah, what the GST law is quite clear. Yeah, well, I have said earlier that for input tax claim is you must incur it for your business or furtherance of your business. So in this instance, if I look at it, irrespective that you are group registration, we still go back to basic and look at who incurred those expenses. If those expenses are member A expenses, then technically member B cannot claim it, even though they have a tax invoice in their own name. So the next question then you need to think of is then to allow member B to claim or to allow member A to claim, would then member B wants to recharge the expense across to member A. Okay?
Yep. I think you have to understand that the group registration only facilitate the filing of GST return under a consolidated return. As to who will be able to claim input tax incur, you go back to basic. Yeah? In order to claim input tax, you must be the person incurring the expenses for your business purposes. You must hold a tax invoice under your name. So your group registration would not change all this basic principle, basic rule in claiming input tax. Mr. Sathya, there's a question for you. In India, what are the taxes that GST replaces, and what is the short-term impact? So I guess in Malaysia, our GST replaces sales and service tax in Malaysia. For India, do you have something similar?
No, we have many things actually. If you have to talk about the taxes that was existing before GST, one day full session is required. So, for example, let me brief it in 5 minutes. In India, the taxation system before GST was, if I manufacture, excise duty was applicable. If I do services, if I do provide services, service tax was applicable, which was introduced in 1994. Apart from that, local, that is the state government. India is a federal country. It's a democratic country where central government has the power to tax the manufacturing, the act of the manufacture and the services. And in case of the sales, it is always the state government which had the power. What GST did was, it first unified this power. Basically, the exclusive power is now shared between the center and the state. And that is excise duty has gone inside the GST, service tax has gone inside the GST, VAT levied by the state government has gone inside the GST. Apart from that, along with the customs duty, there was something called special additional duty that has gone inside the GST. Countervailing duty, when I import equal to my local taxes, some taxes was levied, that has gone inside the GST. And apart from that, octroi has gone inside the GST. You don't even know all these things. If I speak, in Malaysian government will get more revenue because we give a lot of ideas on developing the revenue. So all these taxes has gone inside, multiplicity of taxes has been replaced. Because of that, today we have one thing called GST in India. Other than this, if you look at the campaign of the Indian government, Honorable Prime Minister has said, GST is one nation, India is one nation, even though we have 29 states and 9 union territories, one market. Only on 1st July 2017, India, after independence, got integrated economically. Political integration came in 1947, but economic integration came only on 1st July 2017, because until that point of time, the multiplicity of taxes, because of that, VAT in different states, the rates are different. For example, let me take two examples. Tamil Nadu is one state in India, and Maharashtra is another state. For example, if I buy television in Tamil Nadu, the VAT rate is different. If I buy the same television in Maharashtra, the VAT rate is different. Because of that, let's assume, why television? Let me take iPhone. If I buy iPhone in Tamil Nadu, the VAT rate is different. If I buy the iPhone in Delhi, the VAT rate is different. Let's assume I travel to Delhi tomorrow morning flight. I will not buy in Tamil Nadu. I will go to Delhi, get on at airport, go to the shop, buy at Delhi. Because the VAT rate is different. Now under the GST, whether you buy the iPhone in Tamil Nadu state or Delhi, the rate is the same. So one nation, one market, one tax. It is a dream of India to bring one tax. It has replaced all the multiple taxes. So GST is one nation, one market, one tax. The short-term impact of GST is going to be a game changer for Indian economy. I'll tell you why. GST is not going to just reform taxation. It is going to reform the logistics in India. The reason is, today, logistics in India is inefficient. Let me be very fair about it. Because they have to pay road taxes. While going in the road, they have to stop for check post. To be fair, India, the road tax authorities are a bit corrupt. Let me be very fair. I want to talk about two things here, because I don't want to hide those things. We wanted to, this government, under the Prime Minister Modi ji, wanted to eradicate corruption and black money in India. So to ensure that GST is an answer for that, already checkposts are closed, all the checkposts are taken away, and slowly the road tax also will be taken away. They're planning to introduce something called chip system, where they will fix the chip in the lorry. They will pay all the taxes through digital platform. E-way bill is going to come. And when the lorry is going to go, the officers are not going to check. Chip will detect through sensors whether they have paid the tax or not. And because of that, the per day kilometer coverage is expected to increase at least by 300 times. I'll tell you what is average. Today, America, in US, the average running time of a truck is 700 kilometers. In Asia, my understanding as per the statistics what I have is about 420 is the average. South Africa, where roads are not there, 300 kilometers. In India, we have beautiful roads, but it is just only 180 kilometers to 200 kilometers. The reason is not the roads, and don't underestimate our drivers in India. They're the best, and they can, if the people is there also, they will go in fast. You have to move, otherwise you will be in trouble. So the expected, because of the GST, when the checkpost is closed, the average running time of the truck is going to increase. This is going to bring logistics efficiency in India. This is going to contribute 20% of production in India. When 20% of the production is going to increase, 2% GDP growth is going to happen. Today, India GDP is about 6.5% to 7%. It's spec between 7.5% also sometimes. So let's assume 7.5% plus 2%, 9.5%. Next year, we are projecting it to 9%. And when the 2% extra comes because of GST, India is the only country in the world with a double-digit GDP growth, overtaking China. That's the vision of the Honorable Prime Minister of India, where we wanted to have a best logistics. If the logistics is reformed, the investment climate in India will increase, FDI will increase. India is a huge market, 1.3 billion. You innovate a product in Malaysia, come to India, you have a market. So that kind of ecosystem we are bringing. Ease of doing business in India has to be improved. To be very fair, today out of 189 country, India stands at 130, not because of the people of India, but because of the tax system in India. Tax system. Today, when a businessman enters India, he is very excited. After a while, when he gets notice from the department, he is depressed. And chartered accountant is excited. That's a different issue. But this is happening, and India is looking at becoming 50, to be in the 50 ranks in the ease of doing business. For that, the first step that the government has taken, significant step I would say, is bringing GST and the compliance. Where today in India, you need not have accountant to file your return. You can have a school-going children to file. That simplicity the government is looking at in filing the return. This is the vision of the government. Take it from me, India is into transformation. We are not reforming. We are transforming India. By 2022, India will be a developed nation only because of GST. Because the revenue is going to increase in India.
Thanks, Mr. Sathya. Now I understand why you shared with me that if you were to have a conference on GST in India, you need to have a 1-month conference. Now I understand. Okay, let's take the last question. This is a handwritten question. This question is posed to Mr. Hong and Christine in relation to software. The question here is clarification required. All custom approved GST software should be able to produce or generate GF file. This person mentioned, because this is actually confirmed by a senior officer of custom that all software, approved software, should be able to generate GF file. I think this person's question is because what Mr. Hong mentioned just now is you have to customize and so forth. So can you just clarify?
Hello. Actually, okay. What I do, I'm doing the SAP Business One, not the SAP Enterprise. My SAP Business One, we are able to come out with card file, no issue. But I do understand some of your user, you may face some issue because you are using SAP Enterprise version. And your version, you may not be able to generate the card file. So that part, you may need to further discuss with your vendor or later part, or you want to come and talk to me and so on, because that part ideally need to customize because of the enterprises. They have all sort of business scenario and so on, and over the years the solution have been customized, quite complex. So maybe your vendor, your supplier are not able to customize for you. So that part you really have to talk to them. Okay, whereas this is also moving to another aspect of it. Not only just the SAP Enterprise, a lot of those local customized ERP, they have been in place for many years. Don't forget, your site is being customized for you. In such a short period of, from the time launching, or the announcement of announcement of GST to be imposed, by the time live on 1st April 2015 is less than 2 years. So your vendor may not be able to customize that in such a short period. Okay. So you may have to revisit that and so on. Whereas for us, we actually come up with just a GST add-on module on that, and which applied across all the entire system. Because Business One itself is not it's not a customized solution for say, it's a package solution itself. See, same thing happened to SQL, so it's a package solution.
Yeah. To further to Hong, I think for SQL is more direct, and we do facing, our customer do feedback some issues that recently, this is a recent issue that they being request for GAF, where their current software, where also GST approved, is they have difficulty to provide the GAF file. Maybe there's some accuracy on that, yeah. So they seek for help, and we do support them in this case. And at last, of course, we help them to able to generate the correct GAF file in our software to submit for custom investigation, so-called. So that statement is true, I suppose. However, as a software provider, we should keep on continuing to update, to enhance non-stop, I believe. So yeah, this is our job and our task, and support is a more important like product. Yeah, you still product 30% and support and the features is another 70%. And I believe there might be some other technical question, because this is the last question. So those technical questions that you may look for us in our booth later, and today for SQL, our founder and Dr. Chong Kwai Fat will be there to answer some of your technical questions also. And we also will be there for these 2 days, yeah.
Thanks, Christine and Hong. In fact, Mr. Sathya asked me to actually pose a last question. Mr. Sathya, in Malaysia, before GST was implemented on 1st April 2015, our government actually enacted the Anti-Profiteering Act. Do you have something similar in India?
Now, Indian government is seriously looking at bringing this anti-profiteering. In fact, I wanted to discuss this with Mr. Subro about it. How do we go about doing it? Because Indian government is clueless as to how to bring the anti-profiteering provision. The reason is, India is a market economy. What happened on 1st July is, 1st July, when I went to, I'm basically, I train the officers in the government, I speak to the ministers, I advise the government on the GST. 1st July, I was excited when the GST was launched in India with such a grand celebration. I went to hotel, had the coffee in the morning. And most of the people in Tamil Nadu know me because I appear on television, speak about the government policies. And when I had the coffee price has increased on 1st July. I asked that person, I think he was unaware of about me. And when I asked him why coffee price is increased, he said, because of GST. I said, how can it increase because of GST when you are eligible to take input tax credit on coffee, sugar, and all the ingredients, whatever you use for the coffee? He said, sir, it is because of GST only. Okay, don't ask too many questions. Then I went home and he said, you don't know about GST, sir. GST is a devil, not an angel. He said, then I went back home. I was just thinking about my situation. I'm coaching all people, but ultimately I paid the coffee a higher price. Now the question is, today in India, the challenge is, after the GST got onsetted, industry people, when the government is asking, why did you increase the price? They say, India is a democratic country. India is a market economy. I have the liberty to determine my margins, even though I have taken input tax credit. This is the answer they give to the government. When a common man is asking, they are saying, because of GST. They are not saying they have increased the price. They say because of GST, because common man doesn't understand GST. How can at least professional itself find it very difficult now to understand GST in India? And it's become more complicated subject in India. Albert Einstein said taxes are complicated. You forgot to say it's an Indian tax system. So looking at this, it's a challenge for the Indian government to bring anti-profiteering. And really we wanted to take some guidance from Malaysia. I'm also looking at some books here to buy and go. Said I can give some policies to my Indian government, where I closely work with the Union Finance Ministry. And if Customs has published a book, I want to read and understand the experience of Malaysia so that I can give a note to my GST Council so that they can consider to bring it. If the anti-profiteering provisions are not brought in India, take it from me, people are going to get upset about GST. Because industry people are exploiting the people in the name of GST, and when they answer the government, they talk about market economy. They're very intelligent. And people who we think that they don't know GST, they only know the GST better. Whenever I do a GST morning session, let's assume I used to address for 8 hours. In the evening, in the same venue, another meeting used to happen. You know why? Whatever Mr. Sathya Kumar said, what the government will do, how do we counter it without paying taxes? Same day, somebody will be taking a session. Looking at this, there is a complete requirement today to have an anti-profiteering provision, and we don't know how to implement an anti-profiteering provision. The threshold limit for registration is very low in India. More assessees are coming in. How do we fix that threshold is a question. That's the reason Indian government, until now, in the past 2.5 months, they have not disturbed the baby. Baby is still growing. We are providing nutrition and vitamins. Let's see how it goes, and definitely anti-profiteering provisions are required. I feel that Malaysia can give a contribution for us.
Okay, thank you, Mr. Sathya. Okay, let me wrap up the session. Thank you very much for all my panelists for giving your valuable contribution. From what I can see is, yes, we do have a lot of common issues that may be resolved by DG's decision. At the same time, there are some unresolved issues. But what I can hear from all of you here is, I think continuous engagement with custom is important, whether you are a software provider, whether you are in practice as a tax consultant, or whether you're a taxpayer, education is very important. So hopefully custom will issue a public ruling in times to come to resolve some of this current issue. So thank you very much. Thank you.
Thank you to our moderator, Mr. Chow. I'd like to invite all our panelists to kindly pose for a group photograph to kind of wind up the session. Let's have our photographer center forward to help capture this group photograph with our panelists. And please don't leave just yet, because I've got 3 important announcements to make that you may want to take note of. Before you do leave, please join me once again in thanking our first panel. And here are the 3 important announcements. First and foremost, Mr. Sathya will be presenting a talk on GST, inspired by Malaysia, 3 to 5 p.m. on the 20th of September at the MIA office. And this talk is complimentary for MIA members. So please do kindly sign up and indicate your interest at the registration counter. Thank you. Second announcement, all slides from this session, you'll note, are not in your handouts. They will be emailed to you. So do not ask the organizers for these slides in physical format. They will be emailed to you directly. And finally, for our friends who are vegetarian today, as you head out to lunch, please take note that the vegetarian tables are located on the right as you enter the lunch hall. So once again, as you enter the lunch hall, vegetarian tables will clearly be indicated and they will be on your right. On that note, thank you very much. Please do kindly enjoy your lunch and we'll see you back in the hall at 2 p.m. Thank you.